Welcome to The Explainer. Today, we are diving deep into one of the hottest and, let's be honest, most confusing topics in Indian finance right now, cryptocurrency. Is it the future? A massive scam waiting to blow up? Or could it actually be a smart move for your portfolio? We're going to break it all down.
So let's just start with a really provocative question, one that a few years ago would have sounded absolutely crazy. We all know the big names, right? Reliance, HDFC, the stocks that have been the bedrock of stable investing for decades. But now, with Bitcoin's wild ride, people are seriously asking, could this digital currency actually be a safer bet?
All right, to even begin to answer that, you have to understand the sheer scale of what's happening. I mean, this isn't some niche hobby for tech geeks anymore. We're talking about a full-blown financial movement sweeping the nation.
Just get your head around this number, 107 million. That's how many crypto users there are in India right now. And for the second year in a row, that puts India at #1 in the world for crypto adoption. This isn't just a trend, it's a tidal wave.
And all those people? Well, they represent some serious money. The crypto market in India is now worth over $6.4 billion. You've got this perfect storm of a young, tech-savvy generation, cheap data, and smartphones everywhere. It's basically the ideal breeding ground for digital assets to just take off.
And if you zoom out, this isn't just an India story. The entire Asia-Pacific region is on fire. Transaction values shot up by almost 70% in a single year, and India is right at the heart of that financial earthquake.
All this energy has created this incredibly powerful narrative. With more than 1,200 startups in the game, a lot of people are convinced that India is on the brink of becoming a world leader in Web3, the next generation of the internet. The excitement is just off the charts. But of course, for all the hype and all the growth, there's another side to this story, and it's a dark one. We have to talk about the huge, undeniable risks that everyone, and I mean everyone, needs to know about before jumping in.
Look at this number, over 1,600 crore rupees. Get this, that's the amount of money involved in just one single investigation into crypto fraud. It's a jaw-dropping figure, and it really shows you how common scams are in this space.
And the bad guys are getting smarter all the time. We're seeing everything from these crazy realistic deepfake scams to old-school Ponzi schemes, not to mention big players who manipulate prices and trap smaller investors. It is an absolute minefield out there.
And on top of all the fraud, you've got the government. They've rolled out some really tough tax rules. We're talking a flat 30% tax on any profits, plus a 1% tax that's taken out of every single transaction. Now, this doesn't make crypto illegal, but it sure does make it a lot harder to actually turn a profit.
So let's circle back to where we started. We've seen the massive boom and we've seen the massive risks. So how does Bitcoin really stack up against India's most trusted blue-chip stocks? Let's look at the hard numbers.
This table right here, it lays out the whole story perfectly. On one side, you've got the Nifty 50, your steady, predictable growth. On the other, you've got Bitcoin, which posted an incredible 120% return this year. But, and it's a big but, just look at that volatility column. That amazing performance comes with a huge catch. And this chart really drives that point home. That catch is volatility. Bitcoin's price swings are three times more extreme than the stock markets. What that means is, yeah, you have the potential for huge gains, but you also have the very real potential for massive, terrifyingly fast losses. This is not for the faint of heart.
So this brings us to what might be the real answer here. Maybe we've been asking the wrong question. Maybe it's not crypto or stocks. The smartest investors are starting to see it differently. They're using crypto not as their main bet, but as a strategic tool, a smart hedge.
So what's a hedge? Well, think of it like insurance for your other investments. With worries about inflation eating away at the value of the rupee, some investors are using a little bit of Bitcoin to protect their wealth. Or they're using it to balance things out in case the regular stock market takes a hit.
But here's the absolute key: allocation. This is what it actually looks like. If you're going to use crypto as a hedge, most financial advisors will tell you it should be a very, very small piece of your pie. We're talking maybe 5 to 10% of your total portfolio. That's it.
And to do it right, you've got to be disciplined. That means, first, allocating that small slice wisely. Second, maybe using financial tools like options to manage those wild price swings. Third, diversifying your crypto, don't just put it all in Bitcoin. And fourth, and this is crucial, you have to stay on the right side of India's tax laws.
Okay, so let's say you're a traditional investor, and this whole idea of a small strategic hedge actually sounds kind of interesting. How in the world do you dip a toe in these waters without getting bitten?
The name of the game here is caution, same as with any high-risk investment. Stick to exchanges that are regulated and follow Indian laws. Please enable two-factor authentication on your account. If you're investing a serious amount, get a hardware wallet to store it offline. And learn to do your own homework. And probably the most important rule of all, never ever invest because of hype or FOMO.
So where does that leave us? Well, crypto in India isn't a simple story. It's not an outright scam, but it's definitely not a guaranteed path to riches either. It's a powerful new financial tool, one with huge potential and equally huge risks. Its story is really just getting started. And that brings us to our final thought. In a market this wild and unpredictable, knowledge isn't just power, it's the ultimate hedge. Are you hedged?